Hi, everybody. This is Dave Levine with Trickle Research. It's kind of a new format for us, so we're going to try it out. We've got Corey Raton from Alvopetro. We started covering Alvopetro in November of 2018. At the time, the company was in sort of a pre-production stage of preparing to produce, and quite frankly, the company has really kind of done everything that they said they were going to do. And I think last quarter represented sort of the first full quarter of production out of their project in Brazil, and obviously that's a positive event. It's certainly a big catalyst in the stock, sort of what we've been waiting for. Little bit surprised that the stock hasn't responded more. I think now it's really become kind of a cash flow story, but there are some other elements to the story that I don't really feel like the street is fully understanding, that I think that speak to kind of valuations going forward and kind of the opportunity in general. So I thought I would get Corey on the phone today, or on the, see if we could cover a couple of those items, which is different than kind of going through the deck. Like I said, we're just going to focus on a couple of things and hit a few high points to try to get everybody, to help everybody understand at least what I kind of think is important to the story going forward. So, Corey, I don't know if you want to just give kind of a brief overview of the company and kind of where you've been and where you're at now and where you think you're going, and then maybe I can touch on some of those issues specifically.
Yeah, obviously our near-term focus has been on this Cabaret project that you referred to. On July 5th. We became the very first independent company in Brazil to be able to process natural gas to the sales specification and sell it into the distribution network, which, I think is a pretty interesting milestone when you consider a country of the size of Brazil, that's never been done before. So we're pretty proud of that achievement. It's been, kind of a long road. There were a lot of key pieces to the puzzle to put in place. But now that we have this infrastructure and a strong gas sales agreement in place, it really positions us now to capture the rest of the natural gas potential in our portfolio, and that's what we're focused on next. So, we think it's an extremely exciting time. Brazil's in the middle of a complete transformation of its onshore oil and gas industry, with Petrobras basically selling all of the production onshore in Brazil. So we think we're very well positioned at a very interesting time.
So Corey, I think that's really kind of the important point here that I think everybody needs to understand, for those who aren't familiar with the story a little bit, is that the company has really entered this phase now, this production and commercialization phase, that's really going to be about, just kind of building and accumulating cash flows. And so I guess the question becomes sort of, what do you do with that cash? And I think historically we've talked about dividends and things like that. But I think the bigger part of the story, in my view, or at least the missing piece here, might be about kind of what you do on the exploration side to make sure that you have resources to replace the resources that ultimately you will deplete Cabaret. And that hasn't been a big part of the story, because we've all been focused on getting to production and getting the gas sales agreement in place and all those things that entailed. But now I do think we've shifted to a place where that resource is becoming maybe a bigger part of the story. I don't think it is from this where the stock's at right now, but I think the next leg up in valuation, I think that's probably important. So can you just talk a little bit about sort of what's going on the exploration side and kind of what you anticipate? I know there's some things you can't talk about specifically, but I'm just kind of, if you could give us an overview of the exploration piece and the idea of building additional resources.
Sure. Yeah, well, we had our next couple of prospects independently verified, so I actually can talk about it probably a fair bit more than I normally would be able to. But maybe before I get into that, I think, one of the key pieces that is maybe underappreciated is that all of the investment for this has already happened. So all the wells from our base project have been drilled, all the facilities are constructed, the pipeline's done, the gas plant's done. Obviously, we're selling gas, and we went from basically no cash flow to run rate, cash flows of close to $17 million US per year. So pretty remarkable, I think. And the unique thing is that we don't really yet, you pointed to the fact that obviously in our business, you have to ultimately replace reserves. But what's really unique is because we have excess productive capability from this field, we can keep this production level flat for many, many years without really any maintenance capital at all. So that's really unique, especially in a world of high decline resource plays, where companies probably, it would probably range anywhere from 30 to 70% of their cash flows have to go just to maintaining production at a flat level. So that opens the door now that we can take all of the cash flow that we're generating and dedicate that to a combination of returns to our stakeholders and reinvesting and growing our business. So just to segue into your question, I think it's important to understand that we can fund all of this organically. We've set an initial capital budget of $7.5 million, which represents only about a third of the cash flow that we generate over that same period of time. So we have flexibility to grow that investment. And I think it's been a very, prudent and allocation of that initial cash flow. So with that $7.5 million, we've got 2 exploration prospects planned for the first half of next year. We've actually started the civil construction on the well pads, and we're in the procurement or bid process for securing the rig, which will ultimately determine the drilling window for drilling these 2 prospects. So they're in close proximity to the plant we built, 9 to 10 kilometers directly north of where we built the plant. And these are 2 gas prospects that we've had in inventory for some time. We quite like them. We just were never in a position to drill them because we weren't producing and cash flowing. So, the 2 prospects that we're talking about here, we did have independently certified by our independent reserve evaluators, GLJ. And the best estimate unrisked recoverable resource for each of these respectively is 4.6 million barrels of oil equivalent and 5.9 million barrels respectively. And if you contrast that to our existing 2P reserves from Cabaret, that's about 6.2 million barrels. So on a best estimate basis, we come close to, potentially doubling the size of our reserves with one success. The chance of success is 44 and 48% respectively, as assigned by GLJ. So, it's not that there isn't exploration risk, but when you look at the NPVs of our Cabaret project, we're talking well over $100 million of value potentially that we could add with a success, and we're spending about $3.5 million each to drill these.
So I just want to make this clear too. When you started out, sort of first entered Brazil, you started out trying to find a resource, right? So, I kind of raised this issue in the last update. I think it's important for everybody to understand that, you didn't go into Brazil sort of planning on setting up a gas gathering system and all the things that have sort of happened. That was something that I think you guys did a great job of adapting to things around you. But initially, you came there looking for a resource, which you found. And so you've done this before. It's not like, finding a resource is something new to you.
Yeah, and separate from those are 2 kind of more conventional exploration prospects that would, with success, probably look a lot like our Cabaret development, would have, quite good deliverability. To clarify, our medium-term objective here, we've been producing, at 10 to 11 million cubic feet a day since the project came on stream, but our plant capacity is 18 million cubic feet, and our gas sales agreement has a notional capacity for the same amount. So if we can increase production from 10 or 11 million cubic feet a day up to that, to filling the plant, our EBITDA, our cash flow generation capacity goes from $17 million a year up to well over $30 million a year, because most of the costs are already covered by our core project and are fixed in nature. So it shows you the leverage we have to these. To your point, some of the early investments we made, we ended up discovering a large potential resource in a tight gas formation immediately north of our core project. So that's the other thing, is we now can go back and try and unlock the potential that exists in that resource, which is called the GOMO. We've actually got an optimized production test here planned, just waiting for the production test equipment to become available here, and that should start sometime in the middle of December, and we would expect to have results to announce on that in the early part of next year, which then opens the door to extending our pipeline network and potentially tying in this resource where we actually spent quite a bit of our early efforts delineating and defining, and we're now in a position to try to capture that.
Yeah, so just so I'm clear, I mean, it's to translate that a little bit, do you expect then that you will ultimately process GOMO gas? I mean, is that a reasonable assumption?
Well, that's certainly our plan. We've got we're in the final phases. We expect to get our permit for that pipeline extension in any day. To be clear, it is conditional on a positive test here, but the pipeline investment's only about $2 million. So, I think the other thing that we have the ability to do now that we understand, what we're after here, is we can drill a fit for purpose well that, we know for sure that if we drill a brand new well with a brand new completion fit for purpose exactly for this type of development, that we can easily improve the result. But we want to get a good baseline and get a proper production test from this 183 well that we're doing here later this year.
Okay, so kind of to move on to the next issue, I also raised the point I think in the last update that where we're sitting at right now, and so really kind of the cash flow assumptions that we built everything around has been kind of built around the sort of floor pricing on your agreement. But I think one of the interesting things about Alvopetro that's probably quite a lot different than a lot of resource stories out there is that you do have this floor pricing. And so we kind of know what the downside is, and the downside is sort of where we're at, I think. We built models around that downside, but basically for every increase in pricing that we see in which again, you can cover this a little bit, how that pricing is aggregated and generated, but basically additional upside in energy prices is going to pretty much drop to the bottom line where you're at, because like I say, we've sort of made assumptions about cash flow that's based on the lower thresholds of that pricing. So can you just talk about pricing a little bit and sort of that dynamic?
Yeah, so as you pointed out, our gas sales agreement has a floor and a ceiling embedded within it, which does escalate based on U.S. inflation. So regardless, it will increase. And right now the floor is $5.23 US per MMBTU, and the ceiling is $8.89 per MMBTU. But the actual formula, which gets calculated every 6 months, is a function of Brent oil price equivalent, Henry Hub gas, and NBP, which is the UK gas price. And you blend them together and you average them over a relatively long period of time. And that in itself, certainly reduces the amount of volatility that we see. I think, you pointed out correctly is that, our Q3 results and our current results are based on the floor pricing. So it creates unique, one directional exposure, I guess, on the commodity price, which is almost impossible to find in our space. So right now there's only bias to commodity price increases relative to where we've started here. And if we can continue to see prices at these levels, we'll, hopefully by the redetermination in the middle of next year, we'll start to be above the floor again.
Is there a number out there that, I mean, I know it's complex a little bit, just the math of it all, but is there a number out there that people could kind of focus on a little bit to say, the floor is kind of related, maybe relates to a Brent crude number of $50, or is it that simple, I guess?
No, it's not, unfortunately. And because there's this time waiting, you need some, for it, even if the prices, benchmark prices stayed flat to where they are today, we wouldn't see necessarily an uptick in our price in the next redetermination, because it's still like, this is a recent phenomenon, right? We're still going to have, a decent chunk of the price based on some of the prices that we saw here earlier in the second half of 2020. But if they stay flat and we roll over again, the weighting of those periods of time becomes less and less and less over time, and the more recent periods become a much bigger weighting in the price. So even at flat commodity prices from today, you'll see an appreciation in our price, maybe not on the February redetermination that we have, but quite possibly in the August one. And the problem is, because there's three different benchmark prices, you can't just say, Brent $45 or $50. That's the magic level, because it's a function of all three of them.
Right. Okay. So, and I guess the last issue I'd kind of like to touch on is, yeah, I'm a generalist analyst, so I cover things from soup to nuts. But one of the things that I'm sort of a big picture guy. I sort of look for small companies that maybe have some sort of a big picture catalyst in front of them, or that they put themselves in front of a big picture catalyst. And I made the argument from the beginning with respect to Alvopetro that I believe that you've developed a little bit of a beachhead in Brazil that I think is topical to this story. And maybe I'm overstating it, so I'm trying to kind of get interested in your sense of this. We talked about this before, but I always think maybe I do overstate this a little bit. But just historically, for people that may not know the issues there, Brazil has historically had a state-run, largely energy complex that a few years back ended up in the middle of some scandal and so on and so forth, which resulted in the divestiture of some of that. And I think some of that is ongoing. But my big picture notion to that is that, players in the industry who could establish a foothold there and become a player in a business that was typically run by Petrobras, that would afford them an enviable position that I think could be leveraged as we move forward. And maybe there's additional divestiture in the country. And again, kind of a big picture notion, but I think it's a really neat, unique part of this story. And again, maybe I'm overstating it, but I kind of like to get your sense of, I guess, my sense of that.
Yeah, no, I don't think it's overstating it at all. I think there's an amazing transformation happening in Brazil, where Petrobras, rightfully so, I think, has said, look, the pre-salt opportunity is just so large, and there needs to be 100% focus on that. There's a focus on lowering debt levels, and there's a focus on the government of trying to open up the industry onshore and get those assets into companies' hands that's their primary focus. So it's very clear they're pushing Petrobras very hard to complete the rest of these divestitures, and within 12 to 18 months, all of the production onshore, literally all of it, is going to be owned by independent companies. And there'll be a follow-on phase. It'll be a much more vibrant and active oil and gas industry, which creates a whole bunch of opportunities, especially when you look at Alvopetro, who owns, strategic infrastructure right in the heart of a basin, that, there's excess demand relative to the amount of gas that's being supplied in the basin that we operate. So we're very well positioned, to capitalize on this.
Yeah, and I suppose that from the standpoint of, I guess, what we've talked to previously, just in terms of the excess cash flow that you're going to end up with. I mean, it's entirely possible, it seems to me, that you may ultimately be selling gas in the future from a resource that you don't even own today, that may come about as a result of some of these divestitures. I mean, it seems to me that the opportunity for you to go out and do, and even things, midstream, upstream, downstream, who knows? But certainly there are many opportunities that we couldn't probably even sit here and imagine, and they're not necessarily far-fetched notions because of what's going on in country.
Yeah, no, I think maybe we're guilty of being too conservative with the projections that we put in our presentation, but it's hard for us to kind of project some of these other ideas that we're talking about, obviously. So we've just shown a very conservative, here's what the cash flow stream from our existing project looks like. Here's how we can allocate capital both to return some of that to stakeholders, be it interest and debt repayment, as well as ultimately dividends to our shareholders, as well as balance that with reinvestment in the upstream part of our business. And just from our core project alone, that's over $80 million that we can invest in growing our business. And we haven't shown any benefit from any of that. And I think we've been very conservative in showing 100% repayment of the project financing debt piece that we put in place a little over a year ago. The fact that we can have that completely repaid in the first 18 months of the project coming on stream, I think is really remarkable.
Yeah, I mean, I guess that's sort of the summation, really. I mean, I look at the price of the stock today. I think there's a very, very cogent argument that the company right now is trading at some fraction of what the value really should be based on those cash flows. But on the other hand, then you're going to have these excess cash flows in an environment that is really, really open-ended in terms of potential things you could do. I mean, you could end up being, I don't even think that, if we sort of just look at the summation of this being, the cash flows you've identified and that we can kind of get our arms around. On the other hand, there's still a lot of infrastructure, even in terms of the midstream infrastructure, that I suppose that at some point in time, if you didn't find additional upstream assets or whatever, you could end up being kind of a midstream play that I don't think has really worked into the valuation either. I mean, it just seems like there's a lot of open-endedness to the story beyond the cash flow that I don't think the market's valuing in and of itself. So.
Yeah, the bottom line is we built an 18 million cubic foot a day gas plant. Our off-taker built a 70 million cubic foot a day city gate right at our physical location. So, step one, fill our plant. Step two, ideally double the size of the plant. But, you're right, Dave, there's huge opportunities to aggregate other gas and process it and charge a processing fee. Our preference would be to also partner in the upstream part of that and bring the commercial solution to bear on both the processing and the gas sales side. That's our preference. But if we can, capture midstream recurring type revenue stream by just processing gas as well, we're happy to do that.
Okay, well, Corey, that's helpful for me. I mean, I'm hoping that we can, we'll go ahead and get this video on our site, and then we have a YouTube channel, and we'll see if we can get some other people to pay attention here. But I just believe that this is one of those stories where I'm not really sure why, but it seems like in resource stories sometimes once companies actually get to the holy grail of production, sometimes the stocks have a harder time trading than when they're betting on the hope of a resource, which is kind of odd to me. But it seems like that's sort of the transition here, and I just feel like there's a real opportunity that's very identified. I mean, I think all of the heavy lifting that we identified in the initiating coverage is certainly behind you. You guys have done a really, really great job, in my view, of executing on the things that you said you were going to, which, in this end of the world, the microcap world, doesn't always happen. So, I just think you guys have done a really great job, and I think that the story is quite open-ended, and there's still a lot to come, is my view, I guess.
Well, no, I appreciate that, Dave, and I think the other thing that maybe is underappreciated, if you look at our Q3 results, which is the very first quarter, but our profitability per barrel of production, which I think any new investor to the oil and gas space should really pay attention to that. So profitability per barrel of oil equivalent production, like any business, how much money do you make per widget, basically? And if you look at our quarterly results, it was $26 US per BOE, which puts us, I think, virtually at the very top of our peer group, and just really demonstrates that free cash flow generation capacity that we have. Our debt to, right out of the gate here, our debt to annualized cash flow is under 1x, which, when you're looking at, unfortunately, with what's happened with commodity prices over the last several years, there's not many players out there that can say that. So, I feel very fortunate at this time that we're in this position, and like we said, because we're at the floor pricing in our contract, I'm hoping that this only gets better and better. So.
Well, Corey, thanks for your time. I think we're going to, obviously we'll keep updating our research as you go. And at some point, maybe as we get a little bit more clarity on a few things, there's some additional data points. Maybe we can do this again and talk about some of those as they unfold. So again, thanks for your time, and onward.
No, thank you for doing this. I appreciate it.
Great. Thanks, Corey.
Thank you.